All right, what's going on, guys? Let's get a quick sound check going in the free room, and then over on the, I believe, YouTube and Facebook. So today, guys, they asked me to get with you for a little bit and talk a little bit about the squeeze. And if you know anything about me, you know I happen to be a pretty big fan of the squeeze. So I jumped at the opportunity. Hey, what's up, Earl? What's up, Craig? Miss Lorna, Turbo. All right. Looks like we are good on audio and all that good stuff. All right, so before we jump in, yeah, as always, hope you all have had a good week here. I hope that Mama Market was good to you. So we've had a couple trades this week. Speaking of the squeeze, so one trade from this week was the Amazon daily squeeze, or better yet, the nested squeezes. Had a daily squeeze, a 4-hour, and we are going to eventually talk about the nested squeezes together. But Amazon was pretty good to us. Bought some calls back here in that daily squeeze near that 21 EMA. And then on that pump into Wednesday, we flipped them out for a pretty nice trade. So Amazon was good to us. And for now, we got some calls here in LRCX. Market getting a little bit soft here on a Friday. But for Lamb Research, you got some nice squeezes setting up here on your bigger time frames. Got a good looking bull squeeze here on the 3-day chart. And then nested inside of it, got ourselves a pretty 2-day squeeze as well. So we'll see how LRCX shapes up next week. But all right, folks. So here's what I did. We're going to break this into 3 parts. So today we'll just kind of talk about the basics of the almighty squeeze. All right, what's the thinking behind it? What's the power in it? Show you how to set it up on your charts and all that good stuff. And then, as always, I always like to send you home with a couple of the goodies. And today is no exception. So what I will do here before we wrap it up, for those of you in the free room and then those of you on the socials, is I'll send you home for the weekend with a TTM squeeze scan. And then next time that we meet up and we do part 2, we can make a few tweaks here to the scan and actually build on it. Alrighty? So get the slides up here. All right, guys, so for starters, here's, and it's a focus kind of thing. All right, so to me as a trader, you really want to pick your spots wisely. And the beauty of the squeeze is it kind of ties into this concept that 70, 80% of the time, the market's not doing too much. Now we're moving, of course, but we're not moving in a very concentrated or explosive fashion. No, more often than not, your market's kind of doing a little bit of this. We're up, we're down, we're up, we're down. Then there's the other 20, 30% of the time where you actually get those big explosive moves. The Amazon trade from this week, a good example. Amazon's just kind of chopping near that daily 21, and then suddenly, seemingly out of nowhere, you get that huge push to the upside. So the beauty of the squeeze is that helps us narrow our focus down to those moments in time where the market or the stock is kind of catching its breath and gearing up for that next big push. The 20% of the time where things get pretty good. And of course, most of you know this for sure, but in so many ways, the squeeze is simpler trading. So for any of you in the simpler trading communities, that's a big part of the language that we speak here. And what I think is so cool is that, we've got 10, 12 different traders on the roster. You got some swing traders, you got some day traders, you got some futures traders, some options traders, some Forex traders. For me as a student of the squeeze, what's been really cool is to have, been able to have the opportunity to kind of step back and see how different traders with different approaches utilize the squeeze. And that's one of the only constants I think you'll see between all of us here as traders. Obviously, John loves the squeeze. He is the squeeze godfather himself. I've built a trading career out of it. Henry's really good at trading nested squeezes. So it's part of the lingo here, part of the simpler trading way. But again, the beauty here is trying to narrow down our focus to those moments in time where the market or the stock is getting ready for that big, the technical term is a bigger than expected move. I like to refer to it as a meaningful move. Now, we're not playing for a couple of bucks. We're not playing for a couple of pennies. We put cash to work. We're trying to get paid in a handsome fashion. And to me, that's where the squeeze becomes really helpful. Helps me pinpoint those moments in time where I can get long, I can get short, I can sell my options, I can buy my options. But most importantly, I'm taking action during that moment in time where there's a growing probability that a big, whopping, meaningful move could be right around the corner. And really, there's two phases to the squeeze. All right, compression versus expansion. The buildup of energy, followed by the beautiful release of energy. So on the hourly chart here for the S&P futures, right, there's that moment in time where, at face value, there's not too much going on. We're not falling apart. We're not exploding higher. It's all pretty choppy. It's all pretty quiet. Out of those periods of choppiness, out of those periods of tight consolidation, comes phase two of the squeeze, right? The release of energy. So that's where you'll notice things will go from, what I would call dead in the water. Like there ain't too much happening here, and then boom, right? Big directional move. And our goal and our job is to try to take home the paycheck on that directional move. So phase one is the buildup of energy, and then phase two is the release of energy. So think of it very much like a coiled spring. All right, again, the whole idea here is that compression leads to expansion. So you can look at it as a coiled spring, or one analogy that I like one analogy that I used to use is, I'm sure a few of you have had a puppy. I'm sure a few of you have had a puppy at one point in your life. For any of us who have had a young dog, what happens if that dog is inside for a little bit too long? Starts getting antsy, right? Starts building up all that energy. Next thing you know, the dog is going through the living room running, a couple 100 miles per hour, getting the zoomies. Right? So that dog that's been cooped up inside all day, it's building energy. And then it eventually reaches that boiling point where it's got to release that energy, right? In the form of running around your living room, jumping over your couches. So you can look at it as a coiled spring. You can look at it as a buildup of energy. Or you can look at it as a young puppy ready to play. Oops. All right. So another example here on gold. All right. We're chopping. Nothing is exciting. And then boom. Nice explosive push to the upside. So the goal here is just stacking the odds in your favor. I really try to pinpoint things down to that moment in time where, and here's the kicker, guys. You can do this long or short. You can do this for position trading. You're going to focus on a weekly chart, maybe a monthly chart. You can use this for short-term swing trading. But again, the whole focus here is we're only trying to trade, and we're only trying to put our cash to work when there's a very good chance that right around the corner, we're about to explode to the upside or the downside. And the one constant for me in my last 9 to 10 years of trading is that whenever I trade with a squeeze first focus, I always trade at my best. And whenever I kind of lean a little bit away from that squeeze first focused, that's when the results get a little bit, frankly, a little bit less than ideal. So for me, a big part of consistency is you're trying to trade that same setup over and over and over again. And then what I plan on doing in lesson 3 for us is I'll talk a little bit about my buy and my sell signals. Because I'm at the point where I'm only trading squeezes, but I only trade that squeeze that prints my buy or my sell signal. So we will be talking about that as well. But as far as all the pretty colors here, all right, a couple basics on how to read the squeeze. So there's two parts of the beast. There's the squeeze dots, right, the red and the green dots. And then there's your momentum histogram. Two parts of the beast. All right, so first up for the dots here, all right, whenever you get a red dot, that means that that stock or that market on that given time frame is squeezing. All right, we've entered phase one, the compression phase. When you get your green dot, that means the squeeze is fired. So now we're entering phase two. All right, first comes compression, then comes expansion. First comes your dog, building up all kinds of energy, and then next comes the crazy laps around the living room. And then for the momentum histogram, that's all pretty straightforward. So the light blue bars means momentum is bullish and increasing. A dark blue bar means momentum is still bullish, but you might have reached a point of exhaustion. Still bullish, but you're on the decline. Right? Things may be getting a little bit tired. And then vice versa for the red bars and the yellow bars. A red bar on your histogram means momentum is bearish, and it's getting worse, or better in the favor of the bears. And then the yellow histogram means momentum, it's still bearish, but it's on the increase. It's on the up and up. So to me, the histogram, as far as the momentum part of the equation, it's really important. What we're trying to get paid on is the easy part of the push. So a lot of times the easy trade is getting long during the squeeze and riding that wave of momentum until the histogram begins to shift. So if you're getting long in a squeeze, the easy part of that move can last until you get your first dark blue bar. Now you'll notice price can still go higher when you get your dark blue bar, but what I'm a fan of is the easy part of the move. I don't want to catch the whole move. I don't got to catch every point. I want to catch that easy chunk. So again, a red dot means you're in a squeeze. A green dot means your squeeze has fired. So compression versus expansion. Light blue bar on the histogram means momentum is bullish and on the up and up. Dark blue means momentum is bullish and on the decline. And then vice versa down there for the red and the yellow. And then this just kind of reiterates a couple of those squeeze rules. All right. And now, question for everybody tuning in. It's actually one of my favorite topics. How many of you trade with the original squeeze versus a squeeze pro? If you're in the chat here, chime in. Are we squeeze pro fans or are we fans of the OG? For what it's worth, I'm actually a big fan of the original squeeze. We'll talk a little bit about that as well. But as many of you know, there's two versions of the squeeze. All right, the original version that John made, this was back when the company was called Trade the Markets. All right, TTM stands for Trade the Markets. So there's the original version, and then there's the Squeeze Pro, right? That premium version. So here's the major difference. Think in terms of different levels of compression, right? Different tightnesses of the squeeze, if tightnesses is a word. So on the Squeeze Pro, you have the black dot squeeze, you have the red dot squeeze, and then you got the orange dot squeeze. Now keep in mind, on the Squeeze Pro, the red dot squeeze, that's the original squeeze signal. Right? That's the free version of the squeeze, the red dot. But what you have here on the Squeeze Pro is you're looking for different compressions. All right, so on a compression scale, here's kind of how it works. The lowest form of compression is the black dot squeeze. So if we could make a compression scale, so to say, the black dot squeeze is a 2. Oh, let me get my pen here. Right, so the low compression squeeze on the compression scale is a 2. The mid compression squeeze, the original signal, that's a 1.5. And then the orange dot squeeze, the high compression squeeze, that's a 1. So think of it in terms of tightness. A high compression squeeze, that's as tight as it gets. right? Price action, volume, implied volatility, everything's just super tight. Mid compression, not as tight, but still pretty tight. And then your low compression squeeze is a little bit looser. So when John made the Squeeze Pro, that was the goal. The original squeeze is awesome, but can we play around a little bit with the compression settings and maybe try to find a bit more opportunity? And that was the thinking behind the Squeeze Pro. But before we jump into a couple charts and some scans here, again, that's the beauty of it, especially for options traders. Keep this in mind. You got market makers out there, and their entire job is to price out these calls and price out these puts that we're trading based on the expected move. All right. Now, what the market makers are not taking into consideration is the power of that squeeze. All right. On the other end of that squeeze is a bigger than expected move. The power in that, as far as an options trader, is if you can find that consolidation, right, find that tight back and forth during that period of compression. Market makers aren't pricing in some big explosive push. Right? They're a little bit more pricing those options for more of the same. We're up a little bit. We're down a little bit. Not too much happening here. When you can buy those calls or puts during that period of chop, and then the squeeze turns around and fires in your direction, you're getting paid on that double whammy. All right. Not only are you getting paid because you've nailed the direction, you're also getting paid now if you bought some calls because of the expansion in the implied volatility. Right. During that compression, nobody wants it. Right. It's not a hot commodity, but you better believe once it finally breaks out and that squeeze fires to the upside, now everybody wants it. It's popping up on breakout scans. It's popping up on volume scans. All right, now you're getting paid on that double whammy. You bought it when nobody was paying attention, and now you're getting paid nicely as everybody's rushing in behind you to take a position. So the saying that John used a lot was "feed the ducks." All right, buy it down here, let the squeeze fire, let all the ducks start flocking over, and you dish off your position to them. All right, I'm gonna buy these calls down here at $4. Squeeze fires, and now they're going for $8. Well, I got paid on the easy part of that push. I'm going to sell these calls to the next guy for $8, and then he can take it from there. And more often than not, we'll pull back, we'll get another squeeze, and you rinse and you repeat. So real quick here, in terms of adding this to, for those of you on Thinkorswim, as far as adding the squeeze onto the platform, go into the Studies tab, go to Add Study, and then our man JC's got his own indicator sets. So that's when you know you've made it. That might have to be my new goal. I can't say that I've made it in life as a trader until Thinkorswim has got my own section of signals in indicators. All right, but anyways, studies, add study, Johnny Carter studies, and then TTM squeeze. All pretty simple. And then for those of you who aren't on Thinkorswim, I do believe if you're on TradeStation, you can take a free monthly trial through the TradeStation app, and then it should be available on a lot of other platforms. I know we got it on TradingView. I do believe the squeeze is active on the Tasty Trades platform, and then Infinity and a few others. All right, guys. So next time we get together, we'll go through part 2, and that's where we get a bit more into what am I looking for when I trade the squeeze? What are my rules for getting long? What are my rules for getting short? And when you understand the concept of the squeeze, what you come to learn pretty quickly is, what's better than one squeeze? 2 squeezes. What's better than 2 squeezes on the same stock? 3 squeezes, 4 squeezes. All right, and that's the nested squeeze concept, which we will talk about in part 2. But as promised, right, and I'll show you guys how to do this here. Let me get rid of that. And we'll add it together here. All right, so again, studies, add study. We got to go find John. There's John. TTM squeeze, and voila. And remember, red dot means you're in a squeeze. Green dot means the squeeze fired. Light blue means the momentum is bullish and rising. Dark blue means momentum is still bullish but on the decline. And then vice versa for the red and the yellow. Momentum is bearish and increasing in a bearish fashion, or a little bit of exhaustion. So if you jump over here to Amazon, you can see coming into the week, it had been trading down here in that daily squeeze. And then if you look at LRCX, which we got some calls in right now, come on, mama market. Don't you go out into the weekend like a dud. But then for LRCX here, pull up the 3-day chart. We got our red dots here. That tells us the 3-day time frame is going through that compression phase. Right? And as we know, what's on the other side of compression? That beautiful expansion. Build up the energy, release the energy. But to get y'all kind of pointed in the right direction here as far as looking for squeezes. And like I mentioned, we'll build on this together during lesson 2 and lesson 3. But at a very basic level, here is a TTM squeeze scan. So let me do this for all of you here. Let's go share scan. All right, so I'm going to put this up in the free room. TTM squeeze scan. And for everybody on the socials, I'll drop that here in the chat as well. All right, now what I like to do is up here where it says scan in. For the sake of our time together, let's scan in all optionable. All right, so let's go to the weekly chart. And you can see you got a pretty good list here of weekly squeezes. Visa, UNH, ExxonMobil, Costco, which I happen to like here for what it's worth. T-Mobile, Texas Instruments, UNP. So what y'all can do this weekend, depending on your style of trading, start hunting for some squeezes on your time frame of choice. So say you're a swing trader. I mean, I definitely lean a bit more into the swing trader category. Say your favorite trade is, you're looking for an uptrend, you're looking for a spot to get long, and you generally like to hold on for 2, 3, 4 weeks. A weekly squeeze can be the perfect trade for that kind of trading. So Costco here, pull up the weekly. Right, now here's Costco during the compression phase. Say instead you're a day trader. You like to wake up with the peace of mind of being in cash. You find your trade, you take your entry, you get your piece, you get the heck out of there. If you're a bit more that kind of trader, then I'm a huge fan of 1 hour, 30-minute, 15-minute, 5-minute squeezes. So let's see, on the 1 hour, we got a lot going on here. Apple, Microsoft, NVIDIA, UNH, Home Depot, Cisco. Now not a problem so much, but this is where we got to build on the whole squeeze concept. Just down here on the hourly chart alone, there's a lot to pick from. We have 42 names printing the hourly squeeze. So the $1 million question with every squeeze, and your job as a trader when you trade the squeeze, is you're trying to stack the odds in your favor in terms of getting a really good sense of which way does that squeeze want to fire. Now, that's why the Amazon trade worked for us earlier in the week. Not as simple as, I clicked the button, I ran the scan, I found a squeeze, and now I'm going to blindly jump in and get long. You don't want to do that. So as much as I love the squeeze, understand the squeeze just sets the stage. That's all it does. It says, hey guys, I'm coiled up. Price action has contracted, volume's contracted. I'm gearing up here for a big move. But the squeeze alone doesn't necessarily tell you, yeah, we're going to fire to the upside, we're going to fire to the downside. So a big part of running a scan like this and then quickly narrowing down your watch list is developing a good understanding of what makes a squeeze fire long or short. And that's what we're going to build on over the next couple of weeks here. And the key is you want to lean into a couple different indicators. I think two things you want in your arsenal. Right, one, you want a momentum indicator. Please ignore the handwriting. And then two, you want a structure indicator. So what I'm looking for, if I'm trying to get a sense of, hey, the squeeze here wants to fire long, is I'm going to look at my momentum and my structure indicators. And there's plenty you could pick from. There's the 10x bars, there's the big three signals, there's the stacked DMAs. But that's how you tie it all together. The squeeze sets the stage for a directional move, but your clues, your trigger, in terms of which way do I want to play it, that comes from your other indicators. So not to get too far into it today, but for me with the big three indicator, it's just as simple as a pretty colors kind of thing. Yeah. I find a daily squeeze in Amazon. The daily chart is printing my buy signal. By default, that tells me immediately inside my daily squeeze, my structure criteria, my momentum criteria, everything leans bullish. Now, does that mean the squeeze fires long every time? Of course not. But again, the goal here is we're trying to put our cash to work when two things come together. All right, the first thing being the potential for a big explosive push. And the second thing being, we've got a lot of edge here telling us chances are that squeeze fires one way or the other. And that, my friends, is the key. So like I said, we'll build on this game here over the next couple of lessons. But for now, something to play around with. And now here's what I would say. If you're going through the scans this weekend and you like to squeeze on Apple and you're going through different time frames, we'll talk about this in lesson 2. I think one easy way to narrow down your watch list for a long or a short is trying to really hone in on those names that squeeze across multiple time frames. So not to pound the table here on Amazon, but to me, that's what made it a no-brainer trade coming into this week, where not only was the daily chart printing that daily squeeze, you start going through your lower time frames. We go look at, say, the 2-hour chart. All right, nothing on the 2. Go down to the 1. Right now, leading into this week, inside that daily squeeze, hourly chart had a squeeze. So what I'm a huge fan of is that domino effect. Hourly squeeze coiled up, hourly squeeze fired to the upside, and from there you go on to trigger your bigger squeeze. So that's kind of the thinking right now with LRCX. Right, the biggest of the squeezes at the moment is the 3-day, or the 2-day rather. Oh, that's Amazon. All right, there's LRCX. So the biggest of the squeezes right now is that 3-day squeeze. Inside of that 3-day squeeze, right, during that phase 1 of compression, you're also printing a squeeze down here on the 2-day time frame. So a 2-day squeeze inside of a 3-day squeeze. Take it down a notch to, say, the 4-hour chart. And the 4-hour chart is printing a 4-hour squeeze. So again, think of the domino effect here. If next Monday, Tuesday, Wednesday, the 4-hour squeeze fires long, that could go on to trigger a nice push. That eventually goes on to trigger the 2-day squeeze to fire long. If the 2-day squeeze gets pumping, that could go on to trigger the 3-day squeeze to fire long. And a good rule of thumb with a squeeze across any time frame, once it fires, once you get your first green dot, you tend to look for 8 to 10 bars of momentum in that direction. Meaning, your 4-hour squeeze can fire long, and we can get 8 to 10 4-hour bars to the upside, but that might trigger the 2-day chart to do the same thing. Then you got the 3-day, so on and so on. So I'm a fan of a squeeze on its own, but man, if you can find them on top of each other, the more the merrier. So play around with that scan this weekend. When we get back together to do part 2, we'll get a bit more into the nitty gritty, and I think you should add a few. I think you should add a few moving averages to your charts. I think you should add some Keltner channels, and then we'll talk about the big 3 signals, and then we'll start adding a couple things here to the scan to kind of clean things up a bit. But all right, guys and gals, any questions, any comments, feel free to throw them at me here. And Mirza, for confirmation, is anybody coming up after me in the free room? Yeah, CJ, good question. So what I'm looking for that period of building up energy is price action trading between +1 and -1 ATR from the 21 EMA. All right, so I'm doing a factor of 1. Factor of 1, length of 21, average type exponential. And to me, the price action in that range, that's essentially the squeeze. So if you think about what am I really trying to accomplish here as a trader, whether it be a swing trade, whether it be a day trade, I'm trying to get paid on that move away from that 21 EMA, which is the white moving average right here. All right, that's where I earn my money. We get a huge flush to the downside away from the moving average, or we get a huge rip to the upside away from that moving average. And the best thing that I've found to time those big pushes or big flushes is when price is hanging out right near that 21 EMA inside the squeeze. Inside of that +1, -1 Keltner channel. And what I'm trying to catch is that push into that +2, +3, those Keltner channel extensions further above the 21. So factor of 1, CJ, good question. Yeah, Papillion, we can take a quick look at it. We'll get a bit more into it in part 2. But for those of you with the big 3 indicator, we got the scans that are tailored towards, hey, if I'm going to get long here today, and I'm going to get long on the 1-hour chart, show me nothing but the best possible combo. All right, give me the marriage of those two things coming together, the squeeze, and then my buy signal, which tells me during the squeeze, everything's kind of pointing towards a push higher. So down here on your 1-hour chart, you have Cisco. So here's where you get a bit more focused. You learned a few things in terms of, all right, we should, if this squeeze is going to fire to the upside, we should be above the 21 EMA. We should have stacked moving averages. The MACD should be doing this. When you get a better understanding of what kind of makes these squeezes tick, long and short, it really refines the things you got to look through. There were 42 names printing the hourly squeeze. Now, if we throw in a couple extra momentum and structure criteria, our list goes from 42 to 4. That's drastic. Now, mind you, I'm talking my own indicator here. But I happen to think the combination's a pretty meaningful one. So 38 of those hourly squeezes were just Momentum was whatever, structure was whatever, right? No real huge probability that squeeze wants to fire to the upside. 4 of them do have that combination. And I think that makes your job as a trader so much easier. Right? You want to find the marriage of those two things: compression, the squeeze, and then your momentum and your structure indicators saying, hey, everything's pointing towards we're going up, or vice versa. So Cisco on the hourly. So the red dots in the squeeze tell us we're squeezing. And then on my end, the green label, the green arrow, the green bar, that's the buy signal. So again, there's the marriage of those two things. We're gearing up for a directional push. Structure and momentum for now communicate. Yeah, that directional push probably comes in the form of that squeeze firing to the upside. And that's all I'm looking for every day. Long or short, on a weekly chart, on a 5-minute chart, that's basically the only thing I want to swing at over and over and over again. So that kind of moment in time across multiple time frames, like in Amazon, that's where we get some pretty good stuff. Some pretty good stuff indeed. Hey Dale, thank you for tuning in. I appreciate it. And Fiona, good to hear. Awesome. Good to hear. Count D Monet. How do I determine when a squeeze will fire? When all those things come together. When I got my squeeze printing, and then across as many time frames as possible, either the buy signal or the sell signal is getting cranked out. Now, it's never an immediate thing like, hey, we're going to push right here, right now. But that kind of puts you in the ballpark. So all weekend in the mastery, we're talking about Amazon. It's like, all right, guys, Amazon might need a few days. It might take a few weeks. It might happen immediately. But those two things have come together. We got our squeeze. We got a bunch of buy signals. Might not be this morning, might not be today, tomorrow, but until that changes, you should be getting that big push right around the corner. And that's a huge piece of the puzzle. I don't want to buy Amazon today. I want to buy it down here. All right, no one's really paying attention. It's not popping up on a breakout scan. It's not popping up on a volume scan. Not really a hot commodity. I'm going to nail that entry right here. And then when the whole world loves Amazon, and Amazon's trending on stock twits and everybody wants to buy it, I'm going to take my trade off. Easy part of the push. Let it pull back, let it squeeze, reload. So awesome question. It's just a matter of, do those two things come together? Gearing up for a big push, and then our other indicators say, hey, it should be to the upside or it should be to the downside. And then your job is just make sure you give your options trade ample time. Would I buy calls that expire in 3 hours on a daily squeeze today? No. I'm going to go out to next Friday. No, give it a few days. Give it ample time. Awesome questions, though. Awesome questions. Earl, the S&Ps have had a squeeze all afternoon. Yeah, this thing's getting sloppy. So notice down here, we do have a daily squeeze. But my indicator is not bullish or bearish. All right, gray means neutral. So those are actually the kinds of squeezes I avoid trying to trade. Yeah, we got the compression part of the equation. But my other indicators aren't really saying, hey, this is going to explode, or hey, this is going to fall apart. A little bit more back and forth chop. But Earl, let's check out the hourly here. Yeah, you can kind of see how they've they've kind of fumbled the ball here today. You've had an hourly squeeze here for a few days. Into the open, we're printing that buy signal, and it all kind of fizzles out here. And now on my end, until things change, just leans a little bit more bearish. We're under the 21. The indicator prints a sell signal. Doesn't mean it fires short, but that's a little bit the way that it leans. And that's, kind of finish it up here, guys. That's where having a couple other indicators is so important. All right, by no means at all, in my opinion, should you buy the hourly squeeze up here, thinking it's going to fire long, and now at this point still find yourself in that trade. Yeah, I've got every reason in the world, when that squeeze is printing a buy signal above the 21, to think we're going to fire long. I'm wrong on that kind of thinking way before the squeeze falls apart, takes out support, and fires short. So that's what we're aiming for. It's like, hey, I'm only going to pull the trigger when everything's lining up here. And what that results in is small losses if it doesn't work. Like, all right, I'm taking that bad boy off right away. But if it does work, you're getting that big push to the upside. So really, really good stuff here today, guys. B, another good question. Do I like to trade credit spreads or calls or butterflies? Depending on what's going on in the overall market, I'm either doing a credit spread. So if I'm bullish, I'm going to sell a put credit spread. For what it's worth, though, more and more, because my whole journey over the last 6 months building out the indicator is just trying to get really, really specific about what is my trade. Like, can I really get myself to the point as a trader where I'm ignoring 95% of the things that are setting up out there, and really just try to hone in on that ideal moment in time. So what I'm starting to learn a little bit more is on those trades where, for me on my end, everything lines up, buy the calls. Right? The trade either works or it doesn't. So not to go into a side rant here, but one thing I've noticed with the credit spreads is, myself included, we can get a little bit too relaxed. It's like, hey, I bought the squeeze, I sold some puts, and now the squeeze isn't working in my favor, but I'm going to hold on here. As long as we close above 107, my credit spread will expire worthless, or will expire at max profit. To me, it turns a little bit too much into hope and pray, where my expectation is becoming much more, hey, when I find an Amazon, my expectation is a day, 2 days, 3 days later, I should be getting paid. Like something's very wrong here if that moment in time doesn't lead to a big push. And I don't really want to hang out and, fight the good fight to see who can win. So it's really it's really a matter of getting a sense of what things should look like. And what I'm becoming more of a fan of is just buying the in-the-money calls. This works or it doesn't. And I'm not going to hang around and, hope that we can close above my short put. No. I catch the push or I don't. So buying those in-the-money calls does leave open the door for a little bit more reward. But to me, it's actually more of a discipline thing. You play that hope and pray game with some calls, it gets a little bit painful. So you take the trade with an expectation of what should happen. And if what should happen doesn't happen, well, then you really got to question, why am I still holding that trade? Like Lamb Research. You guys can all throw rocks at me next week if this thing's down here at 510 and we're still holding our trade. Like that would be a shameful thing to do. Why am I buying it right now? Because I think very soon 4-hour squeeze should fire long. That should trigger the 2-day. That should trigger the 3-day. What am I doing holding on to this trade down here at 510? Obviously, I'm wrong. Awesome question, B. Awesome question. Earl, I'm a fan of Delta 70, which in a lot of ways that's the mastering the trade setup. Find a squeeze, buy some Delta 70 in the money calls, do a Delta 70 call debit spread, and you let the bad boy fly. So Chris, I do not use extended hours. I keep the extended hours off. Aside of course from the futures. Keep them on for the futures. But you will get different preferences. I do know a couple traders where they actually keep the extended hours on. So they might find a 5-minute squeeze that I'm not going to see on my end because I'm looking at the cash only. Oh, Jace, don't get me going on Google. Don't get me going on Google. Ugh. Even today with the market being whack, Google still holds up. Nested squeezes, guys, I'm telling you. So Google here, you had the 2-day squeeze. That officially fires long. And the daily. But now, what do I do with the Google at this point? I've missed the easy part of the push. Right, that's what I'm trying to get paid on. So now what I do is say, all right, well, I'll wait for it to pull back. I'll wait for a 30-minute squeeze. I'll wait for an hourly squeeze. I'll wait for my shot. First, just trying to chase it all the way up here. But yeah, Google's been a beast. Amazon, of course, had a pretty big week. Coming back a little bit right now. And then all the while, you got the S&P 500 in the same exact box that we've been in since April. Very, very depressing stuff, if I do say so myself. But all right, folks, we'll call it a session there. I think a good lesson number one as far as the intro to the squeeze. And then I'll look at the calendar. I'll see when we got lesson 2 coming up. But nonetheless, in lesson 2, we'll kind of take things to the next level. What moving averages do you want to add to your charts? What Keltner channels? What momentum ingredient? All right, and then we'll kind of move a little bit closer towards answering the $1 million question. Which way does the squeeze want to fire? Sounds like it could be the name of a game show. Which way will it fire? But all right, guys and gals, as always, I appreciate all your time this week. I appreciate you showing up Monday through Friday in the options room, the mastery, the free room, putting in some effort to improve your craft. So have a good weekend. Be safe. Take your dog for a few walks, and I will talk to y'all Monday morning here in the free room for a little pre-market prep. Adios, guys. Thank you for your time.